Welcome everyone. In this video, we are going to analyze if there could be a boom coming soon for Swftcoin. Don't forget to subscribe and like, and please watch till the end to understand. There is a noticeable downtrend formation on the chart. The price has been moving within this trend line for some time now, giving important clues about the direction of the market. It is clearly visible that the price touched this trend line 3 times, especially recently. However, the fact that it failed to break this zone in each contact and retreated shows that sellers have built a strong defense at this level and buyers have not yet gathered enough strength. This may suggest that traders are being cautious and that the market has not yet built enough momentum for a breakout. However, there is a common view in technical analysis that the more a resistance or support level is tested, the more likely it is to break. This is because in this process, sellers become weaker and weaker while buyers become stronger. Psychologically, markets follow such levels with great importance, especially with falling trend lines. Every time the price approaches this level, sellers step in and pressure the price downwards. However, a steady approach of the price to the falling trend line can be a sign that buyers are gaining more strength and sellers are gradually weakening. This could set the stage for a breakout of the trend line. If the price breaks this trend line with a strong increase in volume, the market could experience a significant change in direction and a great opportunity for investors. This is because, in technical analysis, breaking downtrends is often considered the start of a new uptrend. At this point, if the price breaks the downtrend, it becomes an important question to which levels the potential upward movement can extend. Usually, after a downtrend breakout, the price is expected to move towards the previous highs. This can offer traders a good short-term earning opportunity. Moreover, technical indicators can also support the strength of this breakout. For example, an increase in volume, the RSI breaking out of oversold territory and turning bullish, or the MACD indicator generating a buy signal could be important clues to the persistence of this breakout. It is also quite common for the price to pull back and test the trend line as support after a downtrend breakout. At this point, investors should be careful. This is because if the price breaks above this trend line and stays above it, this is one of the strongest signs that the uptrend will continue. If the price tests this line as support after the breakout and reacts upwards, the uptrend will be on a firmer footing. For this reason, it is of great importance for investors to pay attention not only to the moment of the breakout, but also to the price movements after the breakout. Also, in terms of fundamental analysis, breaking this level can have a positive impact on investor psychology. Because an asset that remains in a downtrend is generally considered unsafe by investors, and those who want to buy at lower prices tend to wait. However, as soon as the trend is broken, this psychology can reverse and investors may start buying with the expectation that the price will rise to higher levels. And so the breakout can come, but we cannot understand that it will rise only with the falling trend. Let's look at the other metrics. According to the Elliott wave theory, price movements follow certain wave structures, and we are currently seeing an example of this in the market. The first wave has been completed, and the price is currently moving in the second wave. However, it has not yet been able to gain a strong upward momentum and transition to the third wave. In the meantime, the second wave is moving in a horizontal pattern, which typically indicates that the market is in the recovery and consolidation phase. Second waves often reflect periods of investor indecision. This is because after the rise of the first wave, prices begin to recover somewhat and the balance between buyers and sellers continues for a while. However, this process can be considered as a waiting phase before the third wave. The sharp and strong price movements in the market usually occur in the third wave. So, the fact that the price is currently flat in the second wave is not a negative situation, but on the contrary, it may be a harbinger of a big rise. Especially according to the Elliott wave theory, second waves can sometimes take the form of deep corrections, while other times they can take the form of more horizontal consolidation. The current process is likely to be the second type of correction. The price action is gathering strength and creating a positive structure in the market before making an upward breakout. If the price completes this sideways move and then transitions to the third wave with a strong volume increase, there is a very high upside potential. It should also be noted that the third waves are usually the strongest and longest lasting. From a technical analysis perspective, the third wave usually brings a rise of at least 1.618 times the first wave. This could present a great opportunity for traders. At the moment, we can say that the price action in the market is still in preparation for this big breakout. In particular, the flat course of the second wave shows that there is no panic selling in the market, and large investors are maintaining their positions. This is a very positive sign for the continuation of the trend. The important point at this stage is where the second wave will end, and when the third wave will start. If the price continues to maintain certain support levels and a voluminous breakout occurs, it is highly likely that there will be a rapid and strong rise with the start of the third wave. The potential of the third wave could become even stronger, especially if technical indicators also signal this. However, traders' patience is often tested during the second wave, because sideways markets can sometimes seem boring and uncertain. But one of the most important things to remember is that big rallies usually happen after such sideways movements. The moments when volatility drops and prices get stuck are often interpreted as the calm before the boom, so a lot of patience is required. When we look at the Bollinger Bands, we observe that the price action has entered a period of compression and the bands have narrowed significantly. This narrowing indicates that the volatility of the market is decreasing and the price is moving within a certain range. In technical analysis, a narrowing of the Bollinger Bands is often considered a harbinger of a strong price move, because after a long period of low volatility in the market, there are often sudden and sharp movements. Such contractions indicate that the market is in a decision phase. The price has been stuck within a certain band for a while, and this is usually a sign of a major breakout. A narrowing of the bands suggests that the price is consolidating at current levels and may be preparing for a strong move. At this point, the direction in which the price breaks will be a critical factor. By examining technical indicators and other analysis tools, one can get clearer clues about the direction of price action. During such periods when the Bollinger Bands narrow, traders usually carefully observe which way the market will break, because as the price tightens, it is expected to break out of the bands with a sharp movement after a while. If an upward breakout occurs, the price is likely to rise quickly. Especially if a breakout comes on volume, the rise could be even stronger. On the other hand, in case of a downside breakout, there could be a decline in the short term. However, if the overall market trend is positive, such declines are usually considered as buying opportunities. The narrowing of the Bollinger Bands also indicates a period of equilibrium in the market. Market participants may not have made a clear decision about the direction of the price at the moment, and therefore the price may be moving in a narrow range. However, such periods usually end with a breakout move. The longer the Bollinger Bands remain narrow, the stronger the move that follows is usually. Therefore, price action should be carefully monitored at this time. Also, narrowing bands usually indicates that volatility is decreasing, suggesting that traders are more cautious when trading and are waiting for a big move. However, it should be noted that a narrowing of the bands does not always mean a sudden rise or fall. Sometimes the price may move sideways for a while. We have to wait patiently for the price to break out. When we look at the RSI indicator in detail, we can clearly see that a downtrend is forming in parallel with the price action. The RSI has touched this falling trend line many times over a period of time, but has yet to break through this level. In technical analysis, when the RSI moves within a falling trend line, it indicates that market momentum is weak and buyers are not strong enough. However, the most critical point in such a situation is when and how the RSI will break this falling trend line. Because in technical analysis, when the RSI breaks a downtrend, it's usually considered a strong signal that the price will similarly start an upward movement. In the current situation, the RSI is approaching an important resistance level and is at a decision point. If the RSI manages to break the current falling trend line to the upside, it would be an indication that the market momentum is starting to strengthen, and buyers are trying to take control of the market. This breakout could bring about an upward surge in price action. Especially if the RSI clearly breaks the trend line and closes above it, it will contribute to a stronger and more sustainable uptrend. Therefore, it is important to carefully monitor how the RSI will move above the trend line. In addition, with the RSI breaking the falling trend line, it is also expected to move away from the oversold zone. This indicates that the selling pressure has subsided and buying trades are starting to increase. If the RSI breaks the downtrend and accelerates upwards, it could boost traders' confidence and lead to more buying. This can be considered as an important development that will help the price rise to higher levels. It will be a critical factor for traders to closely monitor this breakout in order to determine the right trading strategy. On the other hand, if the RSI makes this breakout and maintains its upward momentum, we are likely to see a strong bullish wave in price movements. In technical analysis, RSI breakouts are important signals that are carefully followed by traders and directly correlated with price movements. If the RSI breaks this, the price breaks its own downtrend. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments. Analyze the risks correctly and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.